Welcome back, and joining me with more insight on the day's trade is Omega Shange from Money Mondays. Thank you so much for your time, Omega. It is not Monday, it is Friday today, so we have a lot that we've seen over the course of the week. What's actually stood out for you in how markets have traded this week?
There's quite a few things this week that have obviously stood out. We've seen a lot of major news coming out from the US. Today, we obviously have jobs reports and non-farm payroll, but then we've obviously seen the Dow Jones rise and fall and then rise again. We've seen the S&P 500 rise and fall again and then rise again. So there's been quite a bit of activity, but overall, compared to some of the earlier activity from the beginning of the year, it's been quite a slow start to the first half, or rather to the second half of the year.
Yeah.
So been quite a quiet week, not a lot, but still exciting.
Well, talking about volatility, we saw that in the Tesla stock yesterday. I think it plunged about 14%, a very big plummet there. But then today we've seen in pre-market trading that it seems to trying to be coming back, some investor activity, some buying that we are seeing on that front. And of course, for me, it's mind-boggling that all this is all because of the public spat that we've seen between Elon Musk and US President Donald Trump.
Yeah.
I don't know. Like, my thing is, what exactly do investors assess in terms of what's happening and think, oh, this is how it's going to affect Tesla?
Well, in simple truth, there's a few factors in terms of how the whole Elon Musk, Donald Trump situation affects Tesla. The biggest play for Tesla in relation to Elon Musk and Donald Trump has just been a distracted CEO. Elon Musk is meant to lead Tesla into obviously lead it as the company, but with his political activities, the activities that he's had with Donald Trump, there's been a lot of distraction, and that's what investors have been worried about. On top of that, obviously the EV market has had a lot of pressure. I mean, you've got a distracted CEO and then an EV market that's under pressure. The share price is going to be volatile. At the end of the day, Tesla's earnings and the share price, some investors argue that the two just don't justify the price that Tesla has. Obviously, Tesla has had short sellers in the past, and most of them have sort of like given up. But, you know, Tesla is one of those stocks where there's a lot of volatility. People are losing faith in the company. Elon Musk looks very distracted. The EV market is under pressure. And then in reacting to what's been going on lately, the spat between him and Donald Trump, we saw them on social media discussing government contracts, which is very insane. None of the contracts really do directly affect Tesla. They're about other businesses that Elon Musk is involved in. But at the end of the day, you've got a distracted CEO, and that has a price on the company, and investors just don't like that. Hence, you see the volatility. Yesterday down 14%, today up about 3 to 5%. Probably next week, if obviously they fix things as they expected to have a conversation today, we will see what happens. But I expect Tesla to slowly decrease over time as investors really lose interest in a distracted CEO such as Elon Musk.
Well, I'll tell you about CEOs that are not distracted, and those are the ones that are hitting up our retail companies. Of course, we've had two companies out with numbers today, TFG and Mr. Price, both of them talking about record revenue, record operating profit, and the like. We saw Mr. Price as headline earnings per share up by double digits, TFG up about 5%. I mean, I can't really say that there's anything interesting that we've seen in the share price movements. But all in all, would you say that the story is the same, that we are seeing a recovering consumer, and really those companies are benefiting from that?
I would say there is a recovering consumer. That's one factor. Obviously, with interest rates slowly coming down, we expect a stronger consumer going forward. But most importantly, if you look at TFG and Mr. Price, both of them have slightly entered technology, the technology sector, but in different areas. So with TFG, you've got the Bash app, where they've done very well with online sales. They've developed that app to be one that competes with all the other Chinese apps that we have here in South Africa, such as Temu and Shein. And they've done very well on that front. And of course, their credit book looks a bit, we could say, healthy as well. So that's TFG. Mr. Price, on the other hand, has slowly introduced basically a mobile service, which has been quite interesting. They've entered the telco space. So you can see both of these companies are innovating, even though they're staying within their core business, which is obviously fashion, retail, and credit, but they actually are innovating and adapting to what consumers are actually responding to, which is online sales and lower cost of communication. And I think that's what actually the market is going to, in the long term, reward when it comes to TFG and Mr. Price. It's that internal innovation of seeing what consumers are actually responding to and then acting very quickly and adapting, and then obviously having consumers buy their products or their services or utilize those services, thus actually increasing earnings and hopefully increasing our profits for shareholders.
This is a very interesting point that you make, that we've seen both of them kind of entering the technology space and innovating, because that's also what we have seen with Pepco, where now they've added a layer in their story, with a lot of investors optimistic about their fintech division. Well, let us get to your stock pick for today, Omega. What are you hanging your hat on?
Well, we've obviously brought up TFG, Mr. Price, Pepco as well, and I could lump all those stocks up into one ETF. So my stock pick for today is the Satrix Cap All Share ETF. The reason I love this particular ETF is because of how it caps the individual holding of the overall market up to just 10% of each stock. But the other core reason I really love this ETF is that it exposes you to diverse sectors and industry within South Africa. But most importantly, it has that mid-cap and small-cap stocks there that obviously will benefit from a lot of growth, especially with interest rates coming down and our economy not looking unstable as it has been historically, but actually looking pretty bright with a little bit of optimism, with the rand also looking quite steady. I think the Satrix Cap All Share is something that anyone could put in their baskets and sit back and relax for the next couple of years, and they would get rewarded for holding it.
We'll talk about relaxation. Do enjoy your weekend. Thank you so much for your time and for your insights on what has moved investors' money today and this week. Omega, really appreciate it. That was Omega Shange from Money Mondays.